Welcome back. My name is Ricardo Ferreira, and this is your August edition of Paragon Perspectives, the Long Watch. Let's start this month out by talking about the bond market. Right now, the 2-year Treasury yield is right around 3.72%. That's in contrast with the federal funds rate hovering right around 4.25%. What that basically means is that the bond market, which is a very huge market, much bigger than the stock market, is thinking that the Federal Reserve is going to be reducing rates over the next several months, possibly between 1% to 1.5% over the next 2 years. So we'll see if that actually happens, but that's what the bond market is pricing in at this moment. Even as rates drift a little bit lower, we're still seeing some great opportunities for income for clients. So we're balancing interest rate with needs that clients are having and putting those two together for a robust and diversified portfolio. Despite the noisy headlines, the economy is not falling apart. Unemployment is holding steady right around 4.2%. Total hours worked and wages paid are at record highs. Companies are taking a little bit longer to hire new workers, and they're doing so with a little bit more caution. We believe that has more to do with fears of waiting to see what happens with the tariffs and what kind of effects it has on their bottom line, not necessarily fears of what's going on in the economy. Productivity, however, we believe will pick up within the next quarter. So we think that that's going to be a tailwind towards economic growth and also earnings for companies. And this earnings season has been surprisingly strong. About 75% of companies in the S&P 500 have reported already, and 80% of those companies are beating earnings. Earlier this quarter, analysts expected S&P to grow by around 6%, and it's actually on trend to create about 10% worth of earnings growth for this quarter alone, year over year. And you guessed it, technology is doing really well. Communication services are doing really well. Those are like your Googles and your Metas, that's Facebook. And financials are doing really well. Those are your banks like JP Morgan or Bank of America. Energy is not doing so hot. Materials aren't doing so hot. And healthcare is not doing so hot. But that's why we keep a diversified portfolio. And that's why we take a balanced approach. Healthcare has had a particularly bad year. United Healthcare, as an example, has had a really tough time with their Medicare Advantage unit with rising costs. So much so that they brought back their old CEO out of retirement, who's going to try and get the company back on track to around 11 to 13% annual growth like they were before. Meanwhile, Big Pharma is having a terrible year also, mainly due to pressures from the White House to reduce their costs and possibly some tariff exposure as well. Let's discuss the materials sector real quick. MP Materials has been a bright spot within a pretty lackluster sector. They recently just received a big investment from the Department of Defense and from Apple. All of that investment is going to help bring more rare earth material supply chain structuring back here in the US. They are using some of that money to build recycling facilities in Mountain Pass, California, which is where their mine is, to extend operations in their facilities in Texas, and to also build a new 10X facility to help bring more magnets or more rare earth refining materials here in the US for both our defense needs and also for infrastructure and electronics and chip needs here right at home in the US. Looking out a little bit further, we believe there's a credible case for a long-term bull market, maybe even a repeat of the roaring 20s. We're seeing surging investments in AI, in productivity, in strong consumer balance sheets, and inflation-adjusted income growth. If policymakers can stay out of their own way, we can see this being a multi-decade run, and the kind of run that can create real wealth for patient investors. So while the headlines may sound uncertain, the structure underneath remains solid. As always, we're here, focused and proactive, and committed to your long-term plan. If you have any questions regarding anything that I went over, or you just want to give us a call to see how any of this may affect your portfolio, we're more than happy to sit down and talk to you. Thanks for watching, and we'll see you next month right here in sunny Doylestown.